Hello, everybody. Welcome back to the Quixotic Topic. As always, I'm your host, Daquan Peel, and today I'm joined by.
Tico Bynum.
And today's topic will be Forex, also known as the foreign exchange, which is, as Tika will explain.
Right. So basically, forex is an abbreviation for the foreign exchange market, and basically how you do it, or what traders who trade that do, is they trade currencies. So as we know, the price of currencies fluctuates. So let's say one day, for one U.S. dollar you might get 1 yen, 1 Japanese yen. And let's say the next day, 1 US dollar may only be worth 0.9995 Japanese yens. It's a very small change. However, the smallest amount of money you can be on the market with is $1,000. And so when you scale that change over to $1,000, 2,000, 3,000, 10,000, and so on and so forth, you're talking about making a profit of $1, $3, $10, $100, and so on and so forth.
Okay, so it cascades.
Yeah, for sure. It
So
all depends.
I guess it's about like managing those small changes in value and capitalizing on them.
Right, because I feel like what people have to understand is that currencies are not static; they're very dynamic and they're changing all the time. So if you ever look at a forex chart, you have a pair. So a pair might be like a very common pair is called GJ, and that's the first two letters of the currency pair. So the Great Britain pound is abbreviated as GBP, and then the Japanese yen is abbreviated as JPY.
Okay.
So the currency pair is GBP JPY, and that's the Great Britain pound versus the Japanese yen. And so if you look at that chart, you're going to see movement that goes up and down, up and down, up and down. And that's basically saying the Japanese yen, uh, you know, quite literally, at 1 o'clock, at 1 o'clock, 1 p.m., the Great Britain pound might be worth, 1-to-1 ratio. So one Great Britain pound is worth one Japanese yen. Quite literally, 30 minutes later, one Great Britain pound might be worth 0.998 Japanese yens.
Right.
So although that's a super small difference, we're talking about 4 or 5 decimal places, where a cent is only 2 decimal places. So 4 or 5 decimal places worth of a change is super small. But again, when you leverage yourself and you're on the market for 1,000 or 2,000, 10,000, 100,000, those changes become super big, and to the point where you can make $300 profits, $20, $30. If you're starting off, you'll probably see more $1 profit, $2 profits, but it all adds up with the more trades you do and the more accurate you get.
Okay. And so basically, just kind of trying to parrot that and gotta chop it down a little bit. The whole, not scheme, but idea of Forex is that you're taking a currency and comparing it to another currency. And based off of that comparison, you were able to capitalize on a profit. And so, like, let's say, as you said, the 1-to-1 ratio, that means like there's a neutral. Like that means for every one Britain pound, you have 1 yen.
Yeah.
Once that ratio changes, now for every one Britain pound, you may have more or less
Exactly.
than one Japanese yen.
Exactly.
And so that difference may not like seem very apparent if you only have like one
Yeah.
British pound, but if you have like 6,000 British pounds,
Exactly.
now you have
Yeah.
like a lot more or less Japanese yen.
Exactly. So now you're getting it, and exactly what you were saying. The 1-to-1, we're talking about going from a 1-to-1 ratio to a 1 to 0.9999 ratio. Like,
It's a very small
super
change.
super small changes. However, when you're on the market for thousands, 10,000s, 100,000s, you can even be on the market for millions. And when I say thousands and millions and whatever, we're talking about, that's not your money. So, like, let's say you decide to do forex, and
Okay.
let's say you're on the market for $1,000. Because the change is usually the fourth and fifth decimal place, you don't need $1,000 in your account. You can do that with only $100 in your account, because the change is going to be 10 cent, 30 cent profit, 30 cent loss, 60 cent profit, 60 cent loss, and so on and so forth. So because you're talking about the fifth decimal, the fifth decimal place or the fourth decimal place of $1,000, you can get off with having $60 in your account.
Okay.
Now, granted, let's say you predict that the ratio for the Japanese yen and the Great Britain pound, let's say you predict that instead of being 1-to-1, in the next 3 hours or something, you think it's going to be 1 to 1.0005 or something like that. A very small change again. However, if you predict it and you're right, your $60 account, you might have just made $2.
Okay.
So you went from 60 to 62, you know, you do your thing, and then boom, so now you've made profit.
So is that, I feel like there are some similarities to the actual stock exchange market, in the sense that the longer you're in it, the more money you're liable to make. Because to my understanding, how the stock exchange market works is you buy a stock, which is a piece of a company, and that company, as it generates money, that stock becomes more valuable, and you can sell that stock and pretty much get that delta in profit, and that goes into your account. And so now I get a big difference between Forex and the stock exchange market is that with stocks, you're dealing with companies, you're dealing with people who have like established businesses like corporations and whatnot. With Forex, you're dealing with the actual like money, like it's kind of meta money making, because you're making money off of money.
Exactly.
It's not based off of a corporation, it's based off of what these corporations are dealing with.
It's a crazy thought. And one of my good friends from high school, we always joke like, whoever thought of Forex is like the smartest dude ever, because who would have thought that it's almost like you ever heard of Mansa Musa coming through Egypt and how he would give out so much gold. So let's say he might have came through your village, you know, maybe in like 2000, or he might have came through and he might have gave you 10 pounds of gold, and then my boy comes back in 2010 and gives you like 100 million pounds of gold. It's gonna throw off how much the gold is worth altogether. You see what I mean? So as really Forex really took off around the 90s, when technology allowed people to keep precise track of currencies, because to protect a nation and protect their capital, it would make sense for America to want to tweak its currency just a little bit if they hear that Italy isn't doing too well, or if they hear that Japan isn't doing too well, or on the
in an economic sense.
If Japan is booming economically, they might be like, well, why am I allowing for the American dollar to have this much worth if my Japanese yen has this much worth? So let me tweak the currency rate. Let me change it from 1 to 1 to maybe like 1.001. Something very small changes and stuff. And something you also touched on is how stocks are more so with companies. And so with a stock, you're thinking about long-term wealth. Now, disclaimer to anybody who might be hearing this and thinking about doing Forex. Forex is a horrible way. I repeat, Forex is a horrible way to produce long-term wealth, because it's more so like your day trading.
It's very volatile, as you said.
It's extremely volatile.
I think that's a very like textbook word for this, but as you were saying, these comparisons, these ratios are changing like by the minute,
by the second. They're changing all the time. Like I can literally show you maybe like the Dow Jones.
Well, I can't really show me, but you can explain.
But you could literally see, called it a tick chart, and the tick is the smallest measurement of a movement in Forex. And you can literally just see it jumping up, jumping. It looks like a Richter scale almost, just jumping up and down, up and down, up and down. And so it's a horrible way to generate long-term wealth, because they're talking about stocks. They say, hey, I might have bought 10 stocks of Amazon when it was worth $270 per stock. So you put up almost $3,000 to get 10 stocks. And now one share of Amazon is worth, I'm just gonna lowball it.
Okay.
I know one share of Amazon is at least worth $2,000.
Okay.
So you basically essentially 10 times your money. Over maybe like 10 years or something like that.
And so it's
Forex, it's just,
there's a lot of patience to the stock market that isn't necessarily required in the same way that is Forex. And so one thing that I also want to ask you is how did you personally like get into Forex? Because I know that me on the outside looking in, I've seen a lot of people brag,
flex,
that would be the best word,
recruiters
flex about their momentous gains that they were able to get from Forex, and it does make it seem like a very lucrative thing. And so I was wondering, like, what was your experience with that?
So what I would touch on for sure, Forex is extremely lucrative, and it's almost like a day job. You have to wake up and you're doing it every day. Now, sometimes if you have one good day, you might not need to do it for the rest of the day. So the market is open from Sunday 5 p.m. to Sunday 6 p.m. and that's when it opens, and then it closes on Friday 5 p.m.
And so the market, that is when it's open.
You can trade.
Yeah, that is the time that you can actually make exchanges.
Yeah,
and
you can make trades. You can edit your trades, and you can.
A trade being
exchange.
a purchase based off of these ratios. Okay.
Exactly. My fault if I didn't clarify that. But how
That's
I got
fine.
started was I was a junior in high school. One of my good friends from middle school, he was a part of the MLM company. MLM is multi-level marketing. I'm sure you guys have heard of it. It's like the Mary Kay. It's like the TLC, the T. Basically, it's the corporation of kind of like recruiting people. So it's like, I'm just going to use the example of the TLC, the tea company. I sell tea, but if I set you up to where you sell tea, I get paid more.
Okay.
And things like that.
Right. You earn like commission based off of how many people.
So basically, on the outside, it definitely looks like a pyramid scheme, and I'll definitely explain that more. But nevertheless, my friend, a good friend from middle school, I saw him doing it, and then I didn't really contact him on it, but I saw him doing it, and I looked and I was like, hey, I'll just YouTube it. You know, YouTube is like my best friend. So I begin to YouTube Forex, and I'm on a demo account, and I'm actually doing pretty good.
What is a demo account?
Yeah, there's a demo account. So demo account is fake money, but it moves exactly the same. It's the exact same chart. It's just fake money. So a lot of people use it to practice. I know people who demoed for 3 months, 6 months, for a year before they actually put their real money into it. And that's actually the better step to take, because you're dealing with nothing but your money. So just as easily as you can flip a $50 account to $100, you can flip a $50 account to a $2 account.
Okay.
You can lose it just as fast as you can gain it. And so I was trying to do it on YouTube and stuff, and I was just having a very hard time learning the basics. And part of that was me just not making good YouTube searches. And but
well, I mean, you only had as much as you had.
Right. I was still doing good though. And I kept a journal. I would definitely say I was
adamant about learning.
Yeah, I was very serious about it. I was junior in high school. At a time where junior year school was very easy. Then had to have free time. Would come home, maybe play Overwatch, had a whole bunch of free time, and I was like, let me replace the free time with this. And so as I was really struggling a little bit to learn more and more, Remy was like, that was my friend from middle school. His name was Remy. He was like, yo, man, I'm part of this company. Now, the company is called iMarkets Live. Now, 2020 hindsight, I would definitely advise against the company. I would definitely advise against any multi-level marketing company that tries to get you in.
So you're very like anti-recruiter.
Yeah, anti-recruiter. Yeah. Because when I signed up, I was never, I'll touch on the organization I built, but I was never a person who told the people under me, you call them your downlines. So I was never the upline to tell my downlines, hey, go sign people up. I was like, are you good with trading? Do you understand the market? Because I can care less about you signing people up, because that's not why I'm in this opportunity. Right. And so I eventually signed up with Remy, and we actually built one of the biggest Forex trading, I guess you would say, groups. They call it an investment group. So it's not really an investment group. It's just like a group. We built but I was under Remy. I was one of his downlines, but altogether, we had one of the biggest platforms in Charlotte, and so a lot of people were signing up with us, and we welcome into the group chat every day. We use the app called Telegram. So Telegram is usually what all of the recruiters use and stuff, and we posted on Instagram, and we would have calls. And
is there a specific reason that they use Telegram?
I think it's just a lot easier, because you have Android users, you have Apple users, iPhone or whatever like
it's
that.
It's compatible between all operating systems.
And iMessage groups can be iffy sometimes. So I think it was very easy. It's also very easy to control the group chats. So if you are the admin of a group, you can kick people, you can add people, you can lock it, you can not allow certain things like gifts or anything.
It's like Discord or Slack, but just slightly more focused.
Right,
in a sense.
For sure. Okay. And we used that, and that's basically how I got started. I wouldn't necessarily say he recruited me, because I was on a demo account for about 4 months before I actually signed up.
So he recruited you like on paper, essentially.
Yeah.
But like in terms of, because getting to like the main idea of what you're saying, a lot of times people would recruit just to get that commission bonus that they were earning, as opposed to actually recruiting and teaching people how to do Forex. And so you coming in with a little bit of prior knowledge gave you kind of, I guess, eyes to see what was going on, because there wasn't really very much in terms of instruction.
Yeah, no. And it's crazy because, you don't want to hold the person accountable. You want to credit it to the MLM environment in general. The fact that this is a multi-level marketing company where you're supposed to recruit people, that's what you want to credit it to. But some people would literally, I know one dude, I'm not gonna name him, but I know one dude, he would literally sign up, maybe within a week he would sign up maybe like 10 people. And then, so you sign up and then you're good for that 30 days. And then after the 30 days, you have a monthly. And I'll get into the prices. But the monthly comes, and for those 10 people, when the monthly came for those 10 people, I promise you only had like 2 of them that were able to pay it. Because the 8 people, he didn't teach them. And it's so much self-help.
Right.
It's so much like, oh, I put the resources in front of you. Why didn't you watch the video? Why didn't you do this? And sometimes it takes a lot more than that.
Right.
And from my experience as being a teaching assistant, I see that, it's not always, hey, I gave you a video on how to trade, or I give you a video breaking down what a currency pair is. I gave you a video breaking down what the abbreviations mean. What does a 1-to-1 ratio mean? Right, exactly. Some people need to do a private Zoom with them and stuff like that. And so that's definitely one of the big reasons I left, was because we were kind of overextending ourselves, and we were growing to the point where we only had, I think at our peak, we maybe had like 150 people, something around there. We had a lot of people. Like, we definitely had a lot of people.
But it just wasn't really sustainable because no one was able to pay.
And not only was no one able to pay, but no one was really able to educate. And then, not to touch on the legal aspects on it, but to kind of touch on that, we were all underage trading. And so we were using brokers that were kind of
not the most
not
prestigious.
Not the most prestigious. I would definitely say they worked for what we needed them to, but when it came to things like taxes, when it came to doing things like that, we could definitely got in trouble because the process. I'm not going to name the broker either, but the process for getting an account with the broker, fake birthday, everything was Bitcoin.
Ooh, okay.
Yeah. So because everything was Bitcoin. To load our accounts or to take money out of our accounts, we had to contact somebody who had a Cash App verified, who had to verify the Cash App. And we have to send them money, then they have to send it to our account, everything like that. It was a lot of holes to run through and stuff.
But, running through tunnels, and
it definitely helped. But I would just say that the whole target of Forex was kind of, well, when I was doing it, because I was 17, and so the whole target of it was maybe like 17 to like 20-year-olds.
Right. People who were
extremely young, extremely naive.
In a good place to try and make money quick.
And with that, you see a huge lack of determination. Like, they're not going to make it work. Like, they were just like, yo, if I sign up and if it doesn't work, then boo-hoo, I'm out of this much money. And now to get into the fees, so iMarkets Live. So the company's name is iMarkets Live. I believe they're one of the biggest Forex multi-level marketing companies right now. They're called iMarkets Live, but a lot of people say IML or like IM Academy. It's all the same company. And so you had the starter pack, which is what most people signed up with, which was $235 to start with.
Oh wow!
And then the monthly was $175. No, the monthly was $175 every 30 days.
Somewhat of a steep price for 17 to 20-year-olds.
And exactly. And aside from that was excluding the money to load your account. So we would advise you coming here with a $50 account. So basically you're talking about $280. You pay $280, about right around like $300 almost. $235 goes to the product. So it goes to the videos, like recorded videos that the company had, of the Zoom links to like the sessions of the people I'm not gonna say the people they would put on a pedestal, because the people worked for their titles, but so because it's a multi-level marketing company, you had different levels to it. So you sign up 3 people and you are P150 platinum. The P stands for platinum. So you sign up 3 people, you're platinum 150. You get paid $150 every month. And then after that you sign up 12 people, or like those 3 people end up getting 12 people under you somehow. And now you have your P600. So that was the highest rank I was able to achieve. At one time, I had 17 people under me. It didn't last long. Those kind of started to crumble.
Right. As pyramid schemes tend to do.
I would say the most consistent amount of numbers I had was about 11 to 12 people.
Okay.
But I would say at the peak, I did have 17. I was very happy. So, I was a P600 for the short time being. and P $600 a month. So I don't necessarily know the downlines that are correlated to your rank, but I will just run through the ranks. So you had P150, 3 people, P600, 12 people, P1000 was 28 people, I want to say, and then after that I forget the people, but after P1000, P2000, that's what Remy was. Remy's highest rank was a P2000. So they pay weekly, so that's $500 every Friday around like 6-7 o'clock,
and so
get a email.
Essentially at that point, I think that kind of detracts from the whole making money from Forex as much as making money from people wanting to make money from Forex, right? And so another thing that seems interesting is that, like, would it be, I think it would be appropriate to say that, like, not all Forex, I guess, help companies, if that's what that is. I don't think it would be fair to say that every single one of these companies are structured as a pyramid scheme such as this, but I guess it would be fair to say that a lot of them would. And the reason I say that is because given your description of Forex, and this isn't to like detract from it, this is just to provide context for someone who may be listening, it does seem very analogous to gambling.
Yeah, for sure. And you know, it's gambling, but it's with a strategy. Because when I tell you, I've met people who are, one thing with Forex, another disclaimer, you are never, ever going to be 100% accurate.
Right.
Ever.
As with gambling.
Exactly. But with Forex, when you get good, you're talking about being good with high 70s, low 80s.
What is that?
Percentage-wise. So high 70s, for the month, you might be 78% accurate.
Okay.
Which is amazing. And 78% accurate might mean that, the way Forex works, like how you calculate your money, you have your things called pips, and you have amount of money per pip. So your pips is analogous to the hours you worked. So let's say that somebody worked 10 hours. Somebody caught 10 pips. The one trade that they won, they made 10 pips off of it. And then let's say the amount of money per pips. So the smallest amount is 10 cent a pip. So if you caught 10 pips and you call it your lot size. Your lot size was 10 cent a pip. 10 cent times 10, you made $1.
Right.
And so and so sticking with that, sticking with the accuracy also, let's say that someone was 80% accurate. And let's say with that accuracy, let's say that was 80% accurate over the month of September. So that would mean that maybe over that whole month, let's say they got into around 25 trades or something around there.
And that's, again, like transactions that they've done.
Yeah, 25 trades, transactions. Out of 25, they're 80% accurate. So trying to do the math off the top of my head, they won 20 and they lost 5. Cool. So let's say out of the 20 they won, they might have made 1,000 pips in total. But out of the 5 they lost, let's say they lost 120 pips.
Okay.
So if you were to do 1,000 minus 120, that's 880 pips. And now let's say that they were doing 10 cent a pip for every transaction for all 25. That's 10 cent times 880. They made $88 that month.
Okay, so zooming out just a little bit, I think I might have missed something. So there, again, going back to Forex being a trading off of the difference in ratios of currency value. Okay, I got that. The pip part that comes in with the ratios changing. So like, so does that mean that when the ratios change, when it comes to comparing currencies, does that mean they change based off of a certain amount of pips?
Yeah. So so a pip is essentially just how you measure it. So it's almost like
how you measure that ratio change.
How you measure the change. So it's almost like you measure your room in degrees, and if it got colder, how much colder? You might say it got 7 degrees colder. Yeah.
It's a unit. I got you.
And by decimal definition, a pip is the 4th decimal.
Okay.
So then the 5th decimal is what you call a partial pip. So a pip is the 4th decimal. So let's say something changed from 1 to 0.9999. That would be 1 pip change, because that 4th decimal place changed by
that
1.
4th decimal place in the ratio changed by 1.
Exactly.
Okay.
So that's how you measure it.
So the pip is a measure of is a quantization of the change in ratio.
Exactly. Yep. And that can be good or bad for you. And so one thing I also meant to explain was that Forex is the only market where you make money when your ratios, you have the potential to make money when the ratio goes up or down. So maybe like something with stocks, If I buy a stock at $10, I'm only going to make money if that stock goes anything higher than $10. $10.02, $11, $12. It has to go higher than 10. But with Forex, and this is getting back to you being very accurate, you kind of knowing what you're doing, kind of like strategized gambling. Let's say that, you're predicting that one of the ratios is about to drop. If you get on, so you have this thing called a buy and a sell. So a buy, you want the price of the first currency in the pair to go up. With a sell, you want the price of the first currency in the pair to go down.
Okay.
So with the pair we've been using all day was GJ, Great British Pound versus the Japanese yen. If I was to buy that, I would want the Great Britain Pound to gain strength versus the Japanese yen. If I was to sell it, I would want it to lose strength.
Okay.
And if it loses strength and I sold it, I make money.
Right. And so that gain and loss is measured in pips.
In pips, exactly.
Okay.
Yeah. So, now it's all coming full circle and stuff. And it all depends on what side you're standing on. So let's say that you get into a trade, which is like, a transaction in the market. And let's say you're losing. So let's say that for GJ, Great Britain Pound versus the Japanese yen, you got into a buy. So you wanted it to go up. But let's say it shot down instead. You would be continually losing money as it goes further and further down. And you do have some safety nets, like one is called a stop loss. So a stop loss is the system is automatically going to take you out the trade if it gets down to a certain point.
Right.
And you have the power to set that. Okay. So let's say that you have a $40 account, $40 in your account. And let's say you're like, okay, I just bought GJ, so I want it to go up. If it goes down, I want the system to take me out of the trade once it hits negative $2.
Right.
So
you don't lose any more than negative $2.
And then on the flip side of that, you have a thing called a take profit, which is just the opposite. So let's say that you bought GJ again and it actually did go up. So it's doing exactly what you wanted to do. You might be like, okay, cool. I want to make $2 off of this.
Right.
So as soon as it hits $2 in profit, it's going to take you out.
Right.
And you might open up your phone and you might have been like, wow, I could have made maybe $3, but you'll never lose money taking profit.
Exactly.
Right? And so you made that $2. You're out of the trade now. The trade is closed. It's factored into your balance.
Right. That's $2 that you always have that you can use to make another $2.
And you can definitely use it to make another $2. So that's what a lot of people do. They compound their account. So you guys see people go from 50 to I've seen people go from 50 to 300 in 2 weeks. And how they do that is they have a $50 account. And they might make a $5 gain. Well, that's 10% of their account made just like that. Right. And so if they continue, it's almost like I forgot what the function is called in math.
Compound interest?
I guess it says something like compounded interest almost. So if they continue to hit that 10% of their account every day, then eventually their account is going to be very big.
Right. Okay. And so you've been talking about, we talked about some of the more meatier stuff in terms of like pips and ratios and whatnot. But we haven't really touched on the tools of the trade when it comes to Forex. And so stuff like an account and charts and whatnot, like where would, if someone was starting like ground zero, where would they go to like just have the ability to trade on the foreign exchange market?
I got y'all. And so what I always say, the very most essential thing you need in Forex is a chart. So a chart can be provided by it's a huge company called TradingView. TradingView, yeah. In TradingView is nothing but the chart. And then so to actually place a trade, so let's say you're looking at the chart and you see something you like and you want to place a trade, you want to open yourself up to potentially make money or lose money, cool. You have to sign up with a broker. So a broker is the person that places the trade for you. And so because you don't have direct access to the market, let's say whenever you hit buy or sell on your phone, the broker is the one actually placing the trade on the market for you.
All right.
Cool. And then you have this other app called MetaTrader. And MetaTrader is kind of a combination of all the brokers. And so MetaTrader has like hundreds of brokers on there. And let's say you signed up with a broker named Wildcats or something. The Wildcat broker, you would go to MetaTrader and you would type it in to find Wildcat, then you just sign in with your username and your password.
Yeah, so that's somewhat similar to how the stock exchange market works. A lot of times you need like first and foremost, a bank account somewhere to store money, and a broker. For example, I personally use Charles Schwab. They're fairly reliable. This podcast is not sponsored by them, unfortunately, but you go into there, and then from there you can start making trades with the brokers provided by Charles Schwab. Okay.
Yeah, but that's exactly how it works. So MetaTrader is basically like, I'm not going to say it's not important, but MetaTrader, I mean, it's definitely very important, but MetaTrader is like a middleman almost. They connect you, they make it easy to, MetaTrader also provides a chart, but no one uses MetaTrader charts because they're unreliable. They're horribly, no, they're not unreliable, but they're very elementary. Like a MetaTrader chart is literally just a chart. But with TradingView, you can have alerts sent to your phone. You can look at, you can break it down. So
it's something that you would want for such a very touch and go business as this.
It's like TradingView has all the bells and whistles, and MetaTrader is just there. Like, no one uses their chart. People literally just go there to hit buy and sell, and that's it. They do all of their I guess studying and recon on TradingView, and then when it's actually time to hit buy or sell, they use MetaTrader for it. But other than that,
another thing I want to touch on is resources. We talked about the kind of very high ticket to entry that a lot of people might not have access to when it comes to joining like IML or other Forex teaching companies and whatnot. And you yourself said that you were a bit more of a self-study. And so what are some big kind of helps to you? That was potentially maybe outside of IML.
Right, definitely outside. Now, I'm not too knowledgeable on that because, like I said, that was the reason I joined IML, was for the foundation. It's like, I knew I could have told you, some very advanced things about Forex, but when it came to the basics, like the PIP and stuff, I was like, I really don't know what this stuff is. And it's crazy. It's almost like as you move up higher in your math classes, you forget like linear equations.
Right.
You forget y equals
you need a
mx plus
refresher.
b. You just, it just, like.
And the same thing with
Forex. Exactly, same with Forex. And so one thing that definitely helped me was I forget the channel, and I'm not sponsored by the channel or nothing. I'm not in contact with them or anything, but what was the channel?
Neither is this podcast.
Yeah, neither is this podcast. But I forgot what the channel was, but they had like these beautiful, maybe like 3-minute videos that would just break everything down.
Would you have anything that could point us out? Because if we can find the channel, I can definitely put it in the description.
I want to say it was like FXTM.
All right. Well,
I'm pretty sure I have it in my phone.
We'll say this. I'll definitely have it in the description if you can send me to it after the podcast.
I'll definitely do that because I was a part of IML, so I remember sending that video out to a lot. It's a playlist, so it's about 60 videos. If you're taking notes, it should maybe take you no more than like 3 hours to run through them all. But yeah, that definitely, that's your foundation.
Okay.
And then from there, I would say once you watch those videos, you'll know what this means. An indicator is basically things that try to indicate what the market's going to do. And after watching those videos, I would say stay away from all indicators. The master traders, to see people trading for banks and trading for companies. Like, every company has a Forex department because you have the potential to make so much money.
Right.
And so let's say Walmart. If Walmart can take $1 million and turn it into $5 million in 1 year, that's a huge win for them.
Right.
And you got to think about only doing 5 times your account in 1 year is ridiculously easy. I mean, even playing conservative, even doing very, very conservative things, you're doing 5 times your account in the span of a year. That's ridiculously easy. And so I would definitely say that channel, I'll definitely make sure you have the information, but that channel will definitely give you a elementary kind of like the stepping stone for their education.
Right. A place to get started.
Right, for sure. And then after that, you want to look at now, I personally don't know any good YouTubers or anything who do it like that, or any good resources, but it just came because I've been doing Forex for maybe like 9 months now. Naked Forex, called Naked Forex. It goes by many names. Maybe Naked Forex or Structure, or Support and Resistance. So the 3 names it may go by are Naked Forex, Structure, or Support and Resistance, and they're all the same thing. And that's basically saying that, like I said, the chart almost moves like it moves very erratically, similar to a Richter scale, but it doesn't quite move like that. But it moves like up and then down and then up and then down and then really far down. And then it might come up. So it's a lot of like high points and low points, and basically all structure and naked forex and support and resistance. All that does is say, hey, when this currency pair gets up here, it tends to fall.
Right.
So once you get really good at studying stuff like that, you can say, hey, I know that when GJ, the Great Britain pound versus the Japanese yen, when that price gets close to a 1-to-1 ratio, it tends to fall. So if I'm just monitoring it and I see it getting close to a 1-to-1 ratio, I might just go ahead and sell it. And then if it falls, I just made money.
Right.
And if I was to buy it, I would have just lost money. So a little extra side note is that when you buy and sell, so when you buy a currency, you want the price to go up. So if it goes down, you're losing money. And when you sell it, you want the price to go down. And if it goes up, you're losing money.
Right.
So, very
fairly
common sense.
fairly like makes sense. I think that's a pretty good one-to-one to the stock market in a sense, where a stock market rather a stock that is performing well will tend to continue to do well, and a stock that is doing poorly will usually continue to do poorly. And another thing to clarify, when you do say like chart in terms of monitoring, like that is a monitor of the comparison rates of these currencies, like graphed essentially.
So it's literally a graph where you just see
the value of
you just see them,
specific currencies.
and it always moves three ways. It can either move sideways, or it might be going up and down, and that value might be like 5 pips. It's barely moving. It's up, down. It's not really moving. If you have trending, might be, it's been going down for like the last 3 hours, or it's been shooting up for the last 4 hours. And a lot of things impact forex. So maybe when Trump speaks, when Vladimir Putin speaks, you have this thing released at the beginning of every month called NFP, non-farmer payroll. That's basically a statistic saying how many jobs have been lost and gained outside of farmers. So it doesn't take into account if you're a farmer, but if you aren't a farmer, going to take that into account. And so that's released at the beginning of every month, and we call that NFP week. So during NFP week, there's a lot of heavy news that tends to come out. So most traders just don't trade. Because you have no idea who's going to be scared, which banks are going to pull out, which other, big market movers are going to sell or buy. And so NFP week, usually people either trade super, super, super light, or they just don't trade at all.
And so, to kind of contextualize that, that's as if the gambling odds, because if forex is strategized gambling, then NFP week is when you don't know the odds.
NFP, exactly. Or NFP is throwing some crazy variable in there, which is people. Because we're all human, and let's say Trump is giving a speech and somebody doesn't like the way he was talking about TikTok. They might do something that impacts the NASDAQ.
TikTok is actually, at the date of recording, may or may not be gone from American markets in 2 days.
And so I didn't know that. And so that would definitely be something to keep an eye out because I know that the NASDAQ is heavily impacted by a lot of tech companies. And so if TikTok was to kind of withdraw from the American market, you could potentially see a big drop in the NASDAQ. And unfortunately, if you are a person who bought the NASDAQ and it just drops,
NASDAQ being one of the main sectors in the stock market.
NASDAQ being, I guess, like one of the, something you can trade on, kind of like similar to a currency pair.
It's like a bin where like all companies on the stock market are put into specific bins based off of what they do. NASDAQ is mainly for tech.
And so let's say, TikTok was to unfortunately get banned, and let's say you were to be the person who bought it, and let's say you didn't keep up on the current news, you might be out of a couple hundred, because the NASDAQ, the NASDAQ moves very crazy. NASDAQ moves very big and very huge swings, large amounts.
And of course, the NASDAQ market is probably the best mirror that we'll have between the stock market and Forex.
Because Forex traders, they can trade cryptocurrencies, you can trade energy, you can trade livestock, you can trade stocks. So actually, a little side note, when Apple split, I was doing some research, and I was like, it seems like when companies do a forward split, like Apple is doing, when companies do a forward split, their stock seems to kind of dip down before it shoots back up. And so I sold Apple, thinking that it was going to dip down, and I opened up my phone, and I think I was only down maybe like $25 or something, but my prediction was just horribly wrong, and I was so mad. But now I have the experience,
Right.
and I'm fortunate to have been able to lose that money, but at the same time,
Like not be destitute.
yeah,
after.
because some people that might have been their rent money. Like, hey, I've been doing my research and I see that when companies do a forward split, I know this is gonna happen. The price of the company dips down a little bit before it shoots up, and so if that had to been that person, and let's say they might have put $1,000 on the line,
That's $1,000.
and out of that 1,000, they might have lost 600 or 700 of it. That's a very big loss, especially if it's money that you would need, like essential, something like that.
Right. And so I guess one conclusion to take from the entirety of this is that Forex might not be the move if you need to make payments that influence your life in a great way. Like, this is money that you should be relatively okay with losing.
Right. Like, when I first started Forex, I think I started with like $80 account, and I was, it took me a while, but I was content with losing the entire 80.
And another thing
experience
to like hop onto that is the kind of one like requirement to entry to like Forex and the stock market and just kind of the exchange of money as a whole in terms of financial responsibility is understanding that money isn't necessarily something to be hoarded as much as it is to be used to either accumulate more money or to purchase goods and services. The understanding of like why we call it liquid, the fact that money is meant to be moved. And so one more thing that I want to touch on before we close off the podcast, one thing that we all know stereotypically about Forex is the flexes. And so I want to know, like, what are some of your best kind of like payouts given your 9 months of experience?
Yes. So out of my 9 months of experience, I was with IML for maybe like 5 months, 6 months at the max, but I want to say it's more so 5 months. And with the flex, I personally didn't really do too much of flexing. I always try to keep it, I was never a guy who said I had $1,000 in my account when I really only had like 300. I was never that person. But I definitely, some people who were part of the org I was talking about, they people will go far lengths, because what if they have 27 people under them and they're one person away from getting $1,000 a month instead of 600? They're just like, they're just almost looking to drill somebody in just so they can go ahead and get that increased pay
and so
for that
stretch
month.
the numbers a little bit.
Exactly. And so, of course, I'm not going to do any name calling, but some crazy things I've seen. I've seen people actually Adobe Photoshop their screenshots.
Oh my.
I've seen people just blatantly post demo accounts. So with a demo account,
as we said before, which is practicing. It's not real money. It's not actual profit.
With the demo account, you can load up a demo account with 3,000 fake dollars. So you can say, hey, I have 3,000 in this account, and then you can literally buy and sell the same pair and wake up in the morning, and whichever one is winning, you close the losing one out and you just post the winning one.
Right.
And be like, yo, I have a $3,000 account. I'm up $200. When in all actuality, who knows what your real account is looking like? I've seen people sign people up and just tell them to fish for themselves. I've seen people sign people up, and after they've paid that money, and after they have a 7-day money back guarantee, 100% money back. So after that 7-day period, when they can't get a refund, they just ghost them.
Oh wow.
I'm just like, wow. And so things like that definitely got me out of it. But what I will say is, I know I've named like one person, which was Remy. I would definitely say Remy was maybe one of the best people, one of the best experiences I've had, one of the best relationships I've had in Forex, because he was always willing to help. And Remy's an excellent trader, a really good trader. And
if possible, I'll see if I can reach out to him, and if he's willing to educate a new generation of Forexers,
he may be.
I may be able to place his contact information.
But
Other than that, if you don't have any like I don't want to say like zero to hero, but like any big trades that you did that you want to share and to just kind of demonstrate a little bit of the power of Forex, then I think we would be in a place to close the podcast.
Right. One of my biggest trades was actually one of my biggest trading days was maybe about a week ago. I caught maybe around 80 pips, and I was doing about $2 a pip. So I made around 160, 150 in one day, and I was really happy, it was a nice date for me and the girl. And one thing I will definitely say is, if you do end up signing up for like an IML, just expect that you're getting into a company where they make money off of recruiting people.
And not everyone might be as benevolent as Remy.
Right. Some people strictly recruit, some people strictly trade, but just go in there expecting that and kind of keep your guard up. You know, be on the lookout for the red flags, because there will be plenty of red flags for you. I would definitely say some people are going to teach you a lot about the market, and some people are going to teach you a lot about the kind of company in general. And so, you know, just keep your guard up. You know, always protect yourself. And yeah, that's all I have to say.
Be mindful. And with that, I believe we're finished. Thank you so much for joining me today at the Quixotic Topic, and thank you for listening. As always, this is DP from the QT, signing out.